Welcome to another Dow Jones update. Okay, so as you know, as per my previous ideas that I have called a top on the Dow Jones. Now, I just want to call attention to a couple of things that I have mentioned in writing in previous posts, and that is that at the top here on the 21st of the 21st, the 21st of Jan 21, we did see a evening star candlestick pattern, right? So we have the small doji candle and we have the confirming large bearish candle. So that is a typical, basically by the book evening star candle pattern. We have a hanging man right there next to it, another doji, a bearish engulfing pattern, and basically we are looking bearish at the moment with the market closing at the lows, indicating there is a reversal in progress. All right, and you've also got the three black crows, which in this case they're red, three red crows. So all the signs are there in terms of candles. Now let's just go back to what happened last year in Feb, and we did see basically a bearish harami pattern in terms of the candles. So followed by the doji, and basically, it got worse from there. And as I've mentioned before, it was like 7 days, 1, 2, 3, 4, 5, 6, 7, 8, whatever it is, 7, 8 days before we saw the move continue lower. At the moment, we've only had like 1, 2, 3, 4, 5, 6, about 7. So yeah, we're looking for the 8th day to really kick it off, which basically is Monday. I'm expecting a bit of a gap down on Monday, and if it doesn't gap down, fair enough, but I wouldn't be surprised. I mean, this thing's going to be worse than last year's move. So that's my take on the candle side. So now let's switch on all our lovely pieces of information that we use using Arius Wave, and this is my official count of this market. And there's a 1, 2, and then the 3 was, a very strange looking 3, but it ended up here. And then we had our 4 and our 5. Now our 5, you can tell it's extremely weak. If I turn on the, sorry, one sec. If I turn on the RSI, you can clearly see that wave 5 was very much weaker, right? Now, another thing I mentioned back to do with this move back in last year in Feb, that you saw the same kind of thing happen. You broke the low, which was the start of wave 5 of its wave C. And also around that same time, you started to see the RSI turning lower. Right. So here right now, you can see quite clearly the RSI is even weaker than around the same time when that market started falling, turning lower last year. So you can quite clearly see that the RSI is moving lower, and it has plans to go lower. I believe it has plans to go much lower. So aside from that, let's have a look closely at what we're seeing here. Apart from that, so we've seen a break of the 2-4 trend line, right? That one was broken and retested, right? That was that move that we had a couple of days ago. Actually, it was only, let's just say a couple of days ago, all right, where the market went down low and then it came back with some bullishness, but it basically hit a brick wall when it retested that area. So I'll probably just go to the hour chart to show you that, right? Now I have changed the count of this expanding leading diagonal, which that's what I believe this is. It's very complex pattern. So to me, I had it marked out 1, 2, 1, 2, 3, 4, 5 here, but to me, as it progresses, it looks a bit more complex than that. So I think we're still sort of seeing that kind of thing happen. So we've got 1, 2, 3, 4. So wave 2 was sideways, a little bit sideways drawn out, And then wave 4 was definitely sharp, but hadn't quite finished till around this area. That's assuming it's finished. I think it probably has, because it started to get more impulsive as it broke yet another channel. But this particular channel is the channel used from, I'll show you, actually, I'll go back to the 4-hour for a sec. So it's used from the low of March last year, touching the E wave low, which is important because it's the end of B wave. And then that's where that second trend line is. So I'll just go back to the hourly, right? And as you can see, we closed below that trend line. So that's even more confirmation. So the 2-4 trend line broken, retested, back down through that long-term trend line. And now will be the test of the official RES wave type 2 expanded zigzag trend line, which is drawn basically. I'll show you, actually, sorry, I'll just go back and show you this again. So from the bottom of wave A, right, which is the first wave of the B wave, using the E wave, right? So that's a very important trend line, because that also gives you roughly the top, which it seems to have given us. Not 100% exacto, but it's basically using that trend line as it came up above it and grinded into it, back to retest it again, and then that was it. It was hitting a brick wall there. And as I said, on the RSI, wave 5 was the weakest. So that, to me, pretty much confirms it, because what we're doing here, we're not trying to find an area of confirmation using trend lines and RSI, right? We're using those as a backup to confirm the larger wave count, which I see complete, and that's using RS wave. So RS wave is the key component here. All these other little tools, they're just sort of like extra confirmation to sort of give us, understanding and confidence in our trade, in our short position, right? So where did I go short? Basically went short as soon as I saw this move come up here and retest this trend line. And to me, I just had a feeling that that's what it was doing. And I got in around here. So it was just probably after the evening star candle pattern there. Basically, when I saw that confirming candle close on the hourly, basically I just went short, and I thought, you know what, this is a good place to short from the top. Now, at the time, my wave count was slightly different, but for some reason, because of the rest of the count being correct, you can afford some room to be wrong in this wave count, and you can use these special trend lines that are drawn in place, and also confirming candles if you need to, right? They're definitely good if you can use them, if you know how to use them. But it's based on the previous long-term pattern. So really, we're just looking for weakness here, and I got in right there. So that's probably a good place to get in. Another place to get in might present itself, and I'll have to bring out an idea on that when I see it, because I have to track these waves. It's just part of what I do, and I have to I have to understand the pattern. For me, it's just all about learning, continuously learning, because all patterns are different. But using the framework that I use, I can definitely understand the patterns as they progress. Even if they do appear complex at first, there's always another opportunity to re-enter the market. It's just the way it is, right? Fractal patterns allow you to do that. So that's basically it. Now, we have broken the low here of the previous wave 5. So that's been broken there. It did break it and then come back a bit, retested that trend line. So you can see what the market's doing. You can see that it's using these levels to come back and forth until it just basically breaks and falls through all of them. So that's the process. That's simply the process that it's using to break through all these levels which probably quite a few people are looking at. So it's just reacting to all those levels, right? Because all those levels are people, and how people trade in various ways, in different strategies and different time frames, different degrees of the trend, and all sorts of things, right? There's just a million things. So basically, just touching back on that idea I did a little while back on the Gamageddon trade. Basically, it did actually fulfill that trade, as if you would have looked at it from that perspective, right? But as I said, I'm looking for a complete reversal here. So not only is it going to spike that drink, it's going to go right through the glass, right? So that's what I'm expecting in this scenario here. So as we move forward, what are we looking at? Okay, so I suppose you'd probably be curious about what kind of target we're looking at. Now, I did mention this earlier in a previous video that we are looking for, we're looking at an expanded wave 4 correction in this sense, in this case. So it is actually pretty crazy what we're looking for. Now, I do think there is an area around 14,000 where it's going to go down towards, and it's actually pretty insane, right? So we're not dealing with the same sort of move we saw back in Feb last year to March. I do believe we're going to see something probably a little bit more extreme, and that's what I call the GFC 2.0. So I have written about that in on my blog, but that's just basically what I see happening here. In terms of percentage, it'll be basically the same thing as the GFC. GFC was 55%. Here we're looking at about at least 50%. It could be a bit lower. I don't know. We don't know. Nobody knows, right? All we can do is basically count the waves as they progress. That's what we're going to do. We're going to make sure that we understand what we're looking at here as it progresses. But the point is to be short already or look for an entry point. Now, as you know, when moves get sharp, they do become harder to enter. So I'll do my best to track the waves as we go through them. So we did close 2% lower since the following day. So that's also a good indication that there is a top in place. So I suppose I just want to finish this off with just a view of the price action. You can see there quite clearly the rounded top as mentioned earlier, right? And the same kind of thing. We've closed on a Friday here. I do believe that was a Friday as well, and the Monday it just gapped down and kept going, right? So gap down means that yes, this market will bounce back eventually to finish off with wave 5 of the entire trend since 2009. So we have one more zigzag to go. Actually, it is a zigzag because, as you know through my analysis, I'll link those videos below, that it is an ending diagonal. So that would be basically the third zigzag that we're going to get up. Right now, this is interesting, right? So the first zigzag was kind of weak. The second zigzag was, it feels like it was getting a bit stronger there. And the next zigzag will be impulsive, so it should be, I'd say, probably a little, even a little bit stronger than that, because it's impulsive. Regardless whether it's a zigzag, it's an impulsive one. There's a difference between an impulsive zigzag and a corrective zigzag, right? So, I mean, this thing's getting more crazier as it moves along, so it's going to get more violent as it finishes off its final moves, and it's basically going to capitulate at some point. But until then, we need to prepare for that time because we want to trade the capitulation. We want to trade the end of the entire wave C since 2009 as we then turn into a bear market. So we're going to use the same strategies as we're using here to get into that trade once we get there, right? So we're just going to be going through this whole thing very carefully, just because we don't want to miss out on any opportunities, right? Because there are some pretty insane opportunities coming as this thing gets more violent and crazy. So we're going to use all our lessons learned from trading this move up to basically make the next move a lot easier to trade, right? And now we do know that these zigzags expand like crazy, so we're going to use that to our advantage next time. And I'll talk about that more once it happens. At the moment, we do expect this thing to turn lower. We have broken a previous low. So the more we break those lows, the more this thing will just keep going faster, sharper to the downside. So hopefully you found this video interesting and informative. Thank you for watching.